It is day one of the Fed's two-day meeting, and our senior economics reporter, Steve Liesman, joins us with our CNBC Fed Survey. Steve, what do you see?
Good morning, Becky. Yeah, we have forecasts for higher inflation, but also increased concern about recession. Respondents, though, think the Fed will are increasingly confident the Fed will cut interest rates, but don't see the Fed acting preemptively. 100% say the Fed is going to keep rates unchanged in this meeting, and 77% agree with them. So the idea that the Fed should be cutting now is not held by the 31 respondents we have. But then you can see that the funds rate is forecasted to decline from 433 now down to 371, down to 336 by the end of next year. All of this amid a 53% probability of recession, and that is up 30 points since January for the biggest two-survey increase since 2022 when the Fed was hiking rates. Asked what the Fed will do in the face of higher prices from tariffs but weaker growth, 65% say it will cut, up from 44% in the prior survey. 26% say the Fed will hold in that scenario. That's down from being the choice of the majority in March. So what that shows is increasing confidence the Fed is going to cut despite the dilemma here. The change of heart looks linked to the surge in the chance of recession, a rise in the expected unemployment rate, and a greater belief that tariff-related inflation will be more in control in 2026. Here's the CPI outlook. From 241, the actual in March, it's seen cranking up to 324, but then coming back down in 2026 to around 2.6%. Lou Breen from DRW Trading writes in with the survey, the Fed must project an inflation fighting stance, but in most circumstances, they will react more quickly to labor market weakness. When the unemployment rate rises a few more tenths, the Fed will lower rates and suggest economic weakness will dampen inflation. Well, here's the growth outlook from 3.1 in 2024, now seen an anemic 0.8, but bouncing back to 2% next year, perhaps as a result or with help from those Federal Reserve rate cuts. And then the unemployment rate cranks up by a half a point to 4.7 and remains at 4.6 in 2026. So while cuts are forecast to address expected weakness, the Fed is not seen acting preemptively. The first cut in this survey not fully forecast until July. The second one, guys, not fully forecast until September, Becky.
Is there a June meeting, or it's just this meeting in May and the next one is July?
No, it's May, June, and then July. But again, we have a divided group on this issue of will the Fed cut in June. And that, by the way, is fully reflected in the Fed futures probabilities. Actually, not so much anymore. I didn't get to look at it that closely. Only a 30% probability in the futures market of a rate cut in June, but then that cranks up to 77% in July. So this survey now, the economists who think about this and the traders who trade it are now in line here that May and June are holds, and the Fed gets to work more seriously in July.
I mean, I understand all of that. The Fed works on hard data, not soft data, not people worrying about what might be or what might come, but looking at what's actually happening on the ground. So it seems like that might be the time frame before they would see that really show up in any hard data.
Well, I think the employment report last Friday was a game changer. We saw almost immediately the probabilities of rate cuts decline with that stronger jobs number. So whatever is happening in the economy is not happening immediately, and there still seems to be some decent momentum to the economy. And we'll see. I have not heard, Becky, of widespread layoffs at large companies. The Challenger report last Thursday was under control. We have the federal government, we know, laying off people, but that's a severance thing that doesn't show up until the fall. I think what we've seen and what we're talking about is this issue of not a lot of firing, but also not a lot of hiring. So we're going to be coming down, but not apparently going negative. We'll see what happens with the forecast in May.